Okay, while we wait for a few more folks, we have some time to riff. What do you want to talk about? Anything special? Let me see if my volume is okay. You able to hear me? Okay, cool. Yeah, so today I thought I got a little pleasantly surprised by looking at Stanley Druckenmiller portfolio. Not that I was hunting for it, but I saw news in terms of his portfolio holdings that really got me interested. Thought we'll spend some time to review his portfolio and do a deep dive on his biggest holdings. And apart from that, I mean, all the usual stuff, looking at macro, some food for our mind, something that I watched in the markets, a lot of meme mania going around. I think now I would act, earlier it was just Musk that we thought, I think in 2020 we had Jamaat and Elon Musk powering some of the meme mania, but now we got a new player, Ryan Cohen. So yeah, Bob, that's what's happening in Bed Bath and Beyond. So we will spend, I think last week I did share a chart of the huge rise on Bed Bath and Beyond, but now it has come back to earth. So we will talk about it. I think it might invite more scrutiny, I hope, based on what happened on Bed Bath and Beyond, especially by the actions of so-called activist investor Ryan Cohen. So now I'm adding Ryan's name into the likes of those who pump the stocks and then dump it. So we will we'll talk about that as well. What else? Anything else on your mind? A blacklist? I think it depends on blacklisting would depend, legally blacklisting will depend on if he had any insider information. That we don't know because he was not part of board. He declined to have a board seat. When he was offered, he declined to have a board seat. But given his position, given the stake he has, maybe he has friends in board, that's the thing that we don't know. And if we have had some insider information, based on that, he took a decision that's definitely will call for unpleasant conversations with the SEC. But that's the information we don't have. But if we did not have any insider information, then I don't think it's legally SEC can bar him. But yeah, socially, if we don't want to follow him, that's a different one. So yeah, we will talk about Bed Bath and Beyond, but it looks like, I mean, we saw that whole meme mania just in Bed Bath and Beyond, and some of the others like AMC, GME, the poster child of meme investing, they didn't have the same movements. Yeah. All right, so let's get going. I do want to make one housekeeping announcement. I am expecting a plumber, or hold on, let me just reconfirm. Where's the message? Yeah, I'm expecting a plumber to show up anywhere between 11 to 1. So I did ask for them to, hey, come after 12, but we don't know. Right now, there's a huge, as we know, there's a still labor shortage in the services side. So it's almost a week. I got the appointment after a week, so I don't want to miss that. So if the plumber shows up, if I see the doorbell ringing, probably I'll escape for 10 minutes during the session. Other than that, I think we are all good. But if he shows up after 12 or 12:30, I think then there's nothing to worry about it. But just in case, because the timing gave me was from between 11 to 1. So I might have to disappear for 10 minutes. I apologize for the same, but I don't want to, I have to get that plumbing stuff fixed in my house. All right, so let's dive into today's session. As always, everything is just for education, entertainment, nothing is financial advice. But before we look into the market, I came across a very good tweet thread around 10 reasons why 90% of investors lose money in the stock market. I don't think there's anything new that that's listed here, but it's always good to reinforce and remind ourselves that investing is a lot more about behavioral science than anything else. So I do want to go through this in terms of those top 10 reasons coming from someone who had been in Goldman Sachs and managed a few $billion. First is that they don't understand the investment. This was pretty evident in 2020. If you don't know how the companies make money, you don't know how it can lose money, right? 2020, we all, I think all new investors are all pumping in money into every SPAC, every new IPO, whether they have a product or not. I have no idea how they make money, but that's one way why people lose money. Risk that can be avoided, but often isn't, and why most investors lose money because we invest in something that we don't understand. What I like related to this is another statement from what Warren Buffett says, right? If you cannot explain it to your grandma, then stay away from business. If you cannot explain that business to your grandmom, right? We got to understand business. We got to understand how the company makes money. Second thing, which is near and dear to me, they sell at the wrong time. So as you guys know, I generally don't sell based on, hey, where the stock is going. But there are 3 reasons to sell an investment. I think I have little more reasons. You found a better opportunity. The fundamentals have changed, means the company, either the macro has changed. I would add a few more things. Maybe I lost faith on management. Or, next is you met your goal. The investment has done what it wanted to do, what you wanted it to do for you. So yeah, these are the reasons you sell your stock, but nothing has to do with the stock price. Right? But I mean, majority of us investors will look at a stock price and then sell the stock. And most of the time we sell it at when the stocks are down. So we end up selling at a loss, and when the markets come back up, we're not there to gain. I still see a comment saying bear market rally. I don't know, Sam. I mean, there are different thoughts around it. Again, no one has a crystal ball to say it is bear market rally. But like we looked last week, I mean, there have been more than 20% gain rallies before the market eventually bottomed out in 2000. So is it a bear market rally? Who knows? I mean, it could be just profit taking, right? In this week, market was up 17%. Nasdaq was up 20% in last 1 month, and a perfect opportunity to take some profits, take some chips off the table for those who had invested at that level. So could be bear market. So whether it is bear market rally or not, we'll only know in hindsight, right? And not while it is happening. So that's my thought on whether it's a bear market rally or not. I don't know, anyone else have any opinion around it? Third big reason, they invest on emotion. I think this is probably we have discussed at length in many sessions around investing is more about EQ than IQ. Falling stock price doesn't mean sell. if the business hasn't changed. Rising stock price doesn't mean buy if the business is still bad. We got to understand the difference between good business, bad stock, and bad business, good stock before we invest, right? But easier said than done. I mean, I myself have been guilty of this thing, right? But it's for me, it's a long journey. We got to learn. I need to learn. I need to control my own emotions before investing. So still got to be aware that, hey, after all, we are human beings, and we have emotions, and that's why, I mean, but the whole idea is to be aware of it, and not let emotions overshadow our investing decisions. By the way, I heard a quote. I don't know how far it is true or not, because I haven't checked the veracity of it. Is the most the portfolios that have the best performing portfolio in Charles Schwab are of, any guess? Have you heard about this term? So what I heard about is the best performing portfolios exactly, Bob, is that's what I heard. Those are of dead clients, because dead people don't have any emotions. You know, dead people have no emotions. They don't pile into the stock when the stocks are going high and everyone is buying, and then they can't get out of a stock when there is a blood or downward sentiment in the market. So I also heard the same thing. The best performing portfolio in the Charles Schwab are of dead clients, because they don't have any emotions. Steve says TA is all about price or volume. That is true. Bob, the money manager should be one of the reasons investors lose money. They have a history of blowing up client accounts. So money managers have a different motivation, right? I mean, there are before we hire a money manager, we need to understand how do they make money. If majority of the money managers make money by AUM, right, asset under management, whether the assets are performing or not, as long as they keep growing the pile of the investments into their funds, they're still gonna make their money. So the incentive is to increase the asset under management. And so far, I don't have a very positive view about money managers, because the fee that they charge. As a retail investor, we could still do okay, and stay with what market gives by using low cost index funds, and then also adding on top of it your using options to reduce your cost basis, generate dividends. There are so many ways for us retail investors to manage our own money. Of course, those who don't want to get into this, I would say not business, but those who don't want or don't have an inkling towards understanding the market or reviewing the market, or even investing in index funds, are scared to touch it. Yeah, money managers do play a role to help them getting started in the markets, right? But someone was talking about why Buffett bought railroads. Yeah, I haven't heard about this, but I think Buffett loves those businesses which are predictable. He's a day trader losing money every day. One day he was taken to prison. After 10 years, got out, and his portfolio win over all his day trading pairs. But even though there is, I think, so much of empirical and evidence around let your portfolio do. Don't unnecessarily panic. But I guess internally we all feel good by thinking, yeah, I'm in control of my portfolio. Yes, I can make that. I can click and sell this or buy it. So that's difficult to give up. I think that gives us a sense of control, a sense of accomplishment. Thing is this: yes, I am in control of my portfolio, and my actions will do good for my portfolio. Maybe in a longer term, it may not. Right? So it's a difficult problem to solve. Sam says Fidelity has a free AI portfolio investing. Yeah, I am a little scared of all this AI stuff. I think it's still a long time before I would place my bets on anything that is completely run by AI. If it is equivalent to me picking up the sectors and the Fidelity has an automated way of balancing and rebalancing my portfolio, that's still okay. That's what, let's say, Wealthfront and Betterment and robo-advisors do. But AI portfolio investing, I don't know. I won't be comfortable by handing over my money to an AI model. I think we're still years away from that. The next one is investors want to break even. I am still guilty of this. Is breaking even is when you refuse to sell a stock until it returns to its original price. Even let's say the thesis is broken or the business is not performing. But if I bought at 20, I can't sell it at 15. So that price is anchored in my head. Because for me, if I bought it at 20, that 20 has become the let's say the reasonable price that a stock should have, right? And there's absolutely no reason, absolutely no valid thesis behind it, but we are human, we have emotion, so we'll just anchor that into our head, right? So when you do this, you lose money through bigger losses because, hey, I didn't sell it at 20, I didn't sell it at 15 because in my head, gosh, I got it at 20, I think the reasonable price is 20, so I just need to break even and then sell it. And of course there's an opportunity cost. I didn't sell it at 15, could have invested that somewhere else, and now the stock is sitting at 5. Not all stocks recover, and sometimes your money can get a better return elsewhere. So at least in 2022, I had a tough time in trying to sell covered calls on my stocks at a strike price, which is below my cost basis of the stocks. Right? It is. I bought, let's say, Facebook at 290. Now Facebook at 170. How can I? It's tough to sell a covered call at, let's say, 230, 240, thinking that if it gets called away, gosh, I would have logged my losses because my cost basis is 290. I don't want to sell anything below 290. But this is something that I had to work on hard this year, and so far it has worked well because this 290 number is just in my head. Market doesn't know it. Zuckerberg doesn't know it. No one knows that they need to get the Facebook stock to my cost basis. So far, I mean, I think I do have a table about some of the cost basis reductions so far in this year. So we'll look at some of those. Yeah. So if you are selling covered call, yeah, be aware of this. This particular bias of us trying to anchor on a particular price. Number 5, they invest what they can't afford to lose. I don't have to need to delve deeper into this. As I always say, if you need it for next 3 years, don't put it into the market. Right? We never know what's going to happen in the market next 3 years. They don't know their time horizon, which is related to what we already spoke about. They don't know their risk tolerance. I think this is very important. And of course, risk tolerance, everyone's is different. Your age, your cash flow, your own personal situation, when you want to retire, when you need money, do you have kids going to school, kids going to college, do you need to spend some money, you need to save some money for your medical expenses, blah, blah, blah. But the risk that we need to take on is based on my own risk appetite, but not based on what anyone else is doing. So the stocks that you are desperate to buy 25% drop in November 2021 are now down 80%, right? But you ain't buying those. At November 2021, without, yeah, I mean, if these stocks that have been up 5x in the last 2 years, if they fall down 25%, that'll be going to be a great investment for me to get into those stocks. Now they are cheaper. I mean, we thought that we had that appetite to buy those stocks at that price, but really we don't. Next one, they follow the herd, and that is why the market bubbles and crashes exist. Too many people invest blindly because they heard someone, they read it from someone. Was it last week or a week before that? Wherein I shared the Barron's roundtable. You know, more than 50% of the predictions. You know, it's worse than a coin flip, and that is coming from those who are professionals in doing this, those whose only job is to predict the markets. That's all they do. And if they cannot do better than 50% collectively, then why do we need to follow anyone? That is why I always say, don't follow anyone, don't follow me, don't follow anyone that you hear on the TV. We got to understand our own biases, our own risk appetite, our own time horizon, and our own understanding of business. If you don't understand business, let's find an ETF to invest and take an exposure so that you can spread your bets. Number 9 is they chase performance. The goal of every investment is indeed to generate future returns, but if you chase performance, you are chasing past returns. Right? And lastly, it's impatient. It's a long-term game. We cannot just look into the mirror one day morning and say, okay, I become Warren Buffett. I need to make this money in next 2 years, 3 years. It's important to start early because we cannot buy more time in our lives anyway. So we got to start early and rather not take too big risk and trying to make too much money in a small amount of a time. That smells impatient, and many people lose money. During my initial investing, I was like this. If the stock hasn't performed in a few months, I'm like, that's really not worth it. It hasn't moved much. It hasn't given me returns. Let's dump that and move into something else. So understand these traits, and we got to work on it as a retail investor. No one else will do the work for us. Important is to just understand and acknowledge that, yes, I am guilty of that, and we just need to work on it. I'm sure there's no investor, no trader who can say, oh, I'm not guilty of anything. So figure out where you have which areas that you lack in, and we gotta just improve on that. It's a long journey. It's a learning journey, long journey to continuously learn and improve upon. All right, with that aside, let's jump into the macro. Stocks retreated. I don't know. I mean, because Fed came, so when the Fed minutes came out, market participants thought, oh, I guess Fed is thinking that the peak inflation is over, and maybe the future increases won't be as big. But then on Thursday, we had Bullard. What's Steve Bullard? Or I'm probably forgetting this first name. But one of Fed policymaker, he came and said, I don't think that the inflationary pressures have peaked. I think if we can just bar these regional federal governors to actually give any interviews, the market will lose most of its volatility. Uh, I I didn't realize, until the last 2 years that how strong role these Fed governor statements have in moving the markets, or Fed policies have in moving the markets. Conrad Bullard come and talk about the fact that the idea that inflation has peaked is not statistically really in data at this point, tank the market. Now they think, oh, if one Fed governor is saying this, it means Fed is not going to pivot anytime sooner. They'll continue to raise the rates, and that's not going to be good for the markets. I mean, whether they'll raise rate or not, we'll figure out in September when Fed, makes and announce the decision. But these damn interviews or to media is just creating a lot more volatility in the market. If they can just keep their mouth shut, I think life will be much easier. So what did we see? Growth oriented, obviously, and communication sectors underperformed, dragged down by a sharp decline in meta platforms. I hold that in my portfolio, but it is what it is. Now, that was one interview with now market is thinking that, oh, if the month-over-month inflation didn't increase, but if that is not a statistically relevant figure to think about inflation or easing of inflation, then it means Fed could continuously raise rates at 75 basis points. So I think earlier the expectations for 75 basis points was less. The probability that market had put in was less, but the 50 basis points was much higher. And after that interview, things could have changed. What else we saw? Housing data confirmed a slowdown. So Fed Reserve is looking to slow down the economy. Housing data did show that the economy is slowing down, but the labor market still remains outlier. We're still, I think the payroll number, not what do you call the I am missing the term. That's it. What's the term that the unemployment insurance, right? The unemployment benefits, the number of seeking unemployment benefits, those have gone down in last month. So it means labor market is still stronger, which is outlier, but companies' growth have started to taper. Earnings have started to come down, at an overall level. Now we are seeing housing market has started to cool down a little bit, but the bigger one, labor, is still strong. So we'll have to see how long this, when this labor start to cool, that would determine, okay, now we are formally in moving towards a recessionary scenario before the market bottoms out. So I think there's still time. Whether it's a bear market rally, possibly, but we have seen many times that the real economy and the stock market don't go always, head to head. Stock market probably will look 6 months, 12 months ahead of what's happening in the market. So the economic condition may be very bad. Stock market could rally thinking, hey, we already hit the worst, right? So difficult to predict from that perspective. But in terms of a housing crunch, home builder confidence fell below 50 for the first time. Housing starts for the July dropped 9.6%, which was more than expected. Home sales fell 5.9%, more than anticipated. Now the existing home sales have fallen almost for 6 months in a row. Not the best situation if you are in the market to sell the home. And I don't think it's, in some markets, it's still not the best situation if you are in the market to even buy the home. Some markets those were hot. Yeah, prices have cooled down a bit, but still, a lot more to go before those homes become attractive for people who needs to buy the home in this high interest rate, high mortgage rates. So what else we see? Home sales have likely further to fall. Comment coming from Chief Economist of First American Financial. Mortgage applications so far in August point to another decline in existing home sales, which puts this month's number to 2014 sales level. So, all right, some cracks starting to see in housing markets, and overall the markets have been choppy. The last week markets did right. This week all the indices have now fallen. Right? So in these choppy markets, all we can do is, hey, if I'm holding shares on which the business is still doing okay, but one day some Fed governor will come and open his mouth and say something and the markets fall down, and who knows, next week it might recover that bit. We have absolutely no idea. So in this chopping market, all we can do is to focus on, number one, definitely focus on business, increase our education, and just reduce our cost basis. That's the only thing I can control. I can't control media. I can't control where the stock price is going. Only thing I can control is look at what stocks do I want to hold in my portfolio. If there are some stocks whose businesses I haven't looked at for 1 year and I have no idea what those do, I bought it because one of my friend told me, because he opened a position. Maybe, clean up that portfolio. It's a portfolio cleanup time. And then just sell a premium and reduce cost basis. So I think I tweeted this as a response to someone who was also talking about cost basis reduction. So I shared my top 10 tickers in which in 2020 we reduced the cost basis, right? So top is ASML, almost $130, which is my position is ASML profitable? May or may not be, depending on where I bought my ASML stocks, right? But the fact that in 2020 so far, we have been able to reduce the cost basis by 130, that's a big cushion for me, right? That still keeps me alive in the market, and I can avoid this. Which one was that? They sell because the price is down, right? They sell at the wrong time. Selling premium helps me to take this cushion and stay in the market, hold on to my shares, especially to the businesses which I think you may think differently, which I think that in a long term those should do good, right? Mercado Libre, right? $100 so far. Meta, I recall, I think my cost basis is around 290 or somewhere, but now it is around up to 220. Square, almost $28, but this position is still underwater by 30%, right? Again, I'm not saying that all these positions are green, but just the fact is I can't control if now the market has, some of the stocks have actually fallen 80%, right? That I can't control. All I can do is, if I think still have faith in the stock, what can I do meantime while markets will do the thing that it will do, right? It will whenever it will recover. And again, our investment horizon is not less than 5 years. So yeah, I'll sit and hold. TTD, So I think out of all these, ASML, Melly, Meta, Roblox, Square, Roku, Docu, Airbnb, I've been holding it last year. SE is a new stock that I opened position this year. I never had SE in my portfolio, but open position this year, but it's got a decent option premium. I mean, in whole 2022, the premiums have been pretty nice because the VIX has been all, probably whole of 2022, VIX has been always more than 20. So yeah. LIT, which is a lithium exposure, XLE is energy, NEO another down by 3%. So NEO, I think, is one of the best in terms of best example, I would say, from a cost basis reduction, because right now my cost basis is negative $14 or so, I guess. So this is like sponsored completely by house money. Yeah, that's all we can do. Sachin asks, do you have to calculate manually cost basis reduction per stock, or any stock brokerage accounts provides that? I am not aware of at least the stock brokerages that I have. They don't provide the net cost basis, right? From their perspective, when you look at you sell a call option, that's like a different QSIP number. And they'll calculate the profit and loss of their option separately and your stock trade separately. But this is something which I keep track of. Ramesh says, these numbers are from selling covered calls. How do you keep track of multiple trades, roles, say NVIDIA or any other stock? Okay, so I want to be clear. This is not from selling just covered calls. This is selling from all option premium, right? Which could include, for example, on Meta, I still have an iron condor position in it, right? So let me just bring that up. This is whole option premium selling, not just the covered calls. So if you look at a Meta, right? So I still have this iron condor position, which is I wanted to close this on Friday, got a little greedy thing. Okay, it's giving me negative delta, which is what my portfolio want, which is, but I think now on Monday it should get auto closed. Hopefully, maybe tonight I'll reduce my expectations and change my GTC order to get out of this sooner, because already, it gives me what, another $270. I hold 140 stocks. In this, we make another 270, that reduces cost basis by or more than by another few dollars. So yep, so it will be all option trades, not just covered calls. SP says cost basis shows reduction of cost from selling of options in TDA. I don't think so, SP. Or maybe because when I'm looking at maybe by the end of year, because for example, this cost, which shows me this price over here, this is does not take the impact of option pricing. But if you are referring to going to TD Ameritrade website and looking at the cost basis there, I haven't checked that. Oh, okay. You're referring to going to your cost basis page. But again, I have the way I track is across all my accounts. So I have to keep a little manual track of it, because I do use Tastyworks also, and might have some holding. I don't have Facebook, but for example, I have a Ford in both Tastyworks as well as TD Ameritrade. And then I might have Ford in some of my long holding. So I just want to look at across all my portfolios, including retirement account, including my decade-old Wells Fargo, which is just sitting there. Haven't touched it. I mean, that's probably one of the best performing portfolio, because No emotions over there. I don't do much over there. TD Ameritrade, Tasty Works. So when I'm looking at these, it is across all my portfolio, all my accounts, right? So why not? I'll just sit tight and do what is in my control, and that's all we can control, and let market do its thingy. All right, S&P sector wise, I mean, except the defensive sector, which is utility, consumer staples, everything else was in red. And worst were like these communication services, Facebook and the tech companies. Earnings from next week, I thought maybe the most of the earnings we are done with earnings, but still there are some interesting companies that have yet to report earnings and could still move the markets. Salesforce is one, because the tech market could move based on what Salesforce report. Nvidia, I think I have position on Nvidia, so it's gotta be, maybe I have to watch this. Yeah, which are the other ones you're interested in? We'll see what a firm has to say. Oh, Peloton, still alive. Now, Splunk, we'll see how their turnaround strategy, if that is working or not. But I don't have any positions on Splunk, so not okay. I'll be interested in Xpeng. I have some position in that for my EV play. Nvidia, no, I don't have Snowflake. I don't have Splunk, no NetApp. Yeah, I think those are the few. SF Media hoping. Okay, Dreamforce will revive economy. Oh, is that their annual conference? When is that? Okay, September 19th. Nvidia may be reporting bad news. Possible, but we don't know what the stock will do though after that. Again, I think, didn't Nvidia already set market expectations around it? Where is Nvidia from? Nvidia. No, I think it's being choppy. We'll see. We'll see. Again, I think Nvidia already issued guidance 2 weeks before earnings. Oh, okay. Yeah, that was I wondering, that didn't Nvidia already set the expectations? So we don't know how much of that has already been priced in, and sometimes less bad news may turn out to be a good news. So I'm not making any more bets based on the earnings. Only thing I hold is, I think I do have this position, and if it stays here, I'm gonna make some decent money. I mean, again, this chart doesn't show what's the overall premium because I rolled off one of the position, took profit on that, but I still have open position in this one. So I hope if it doesn't move too much, that should be fine. Even if it does, I think it's an iron condor, so don't have an unlimited exposure. All right, let's any question, anything you watching or interested in next week? Anything interest you? All righty, so let's move on to the next one, which is Stanley Druckenmiller. I want to look at Stanley's portfolio, see what it has, and there's one stock that we will look at it again. I think last time, maybe in last one we looked at was when it was pre-IPO. So it's a time to maybe relook at that and see how that company has performed. Any guesses about that company? Stanley Druckenmiller. By the way, you think about your guesses. Why are we talking about Stanley Druckenmiller? Right? Warren Buffett, or probably all investors know, Stanley Druckenmiller, not that household name, but those who are still stay active in market probably would have heard about him. He's a founder of, I don't even know how to say this name, right? Whatever, the family office, but that's not where he got his credentials in the market. He's got almost $7 billion of net worth, big billionaire, number 343 in the world today. But he's been a hedge fund manager he was a hedge fund manager, has been for 30 years. Where came into prominence is his association with George Soros. So George Soros brought him in 1980s or early 90s to manage his quantum fund, and it was Stanley Druckenmiller who suggested George Soros to bet against British pound and made millions or billions of dollars in profit. That's something called a Black Wednesday, when they almost brought down a Bank of England kind of stuff. And that made them, they earned their credentials from there. And George had no idea about it. It was all Stanley Druckenmiller. So he started his own fund in 2000 and post an average annual return of 30% without any losing year. On August, he closed that fund, saying he'd been worn down by the stress of trying to maintain one of the best trading records in industry while managing an enormous amount of capital, right? I think when he closed down the fund, it was almost $13 billion asset under management. Getting 30% return year over year, every year on an average, not every year 30%, but on an average 30% per year return for 10 years is not easy, and especially if the asset under management continues to grow. You can do this if you're $100 million, $500 million, $1 billion, but when it becomes $13 billion, getting the 30% return is not easy. I mean, that guy made his money and said, why do I need to take stress? So now he just manages his own money, no longer manages any public money, no longer manages any institutional money. And I think his own money is big money to manage anyway. So, any guess, what's the largest holding? Please don't Google. What's the largest holding of Stanley Druckenmiller? And I think last week, someone pinged up, we were talking about various companies, and someone actually pinged that name of that company. All right, it's an e-commerce company. That's a hint. All right, I didn't know about this. Not Amazon. I didn't know about it until I don't know which website or somewhere I saw this news. I'm like, oh, I'm not aware. Almost 1/5 of his portfolio. 1/5 of portfolio. Certain second guess is right. 1/5 of his portfolio is in Coupang. Right. So if you overall look at his holdings, this is the top holding and this is as of I think end of June. This is top holding of his own personal wealth, which is almost 18%. Next is Microsoft, doesn't need any introduction. Chevron, Eli Lilly, Freeport McMoran, which is a copper play. I hold this, don't hold this. I hold XLE. Eli Lilly, don't hold this. I never actually looked into Eli Lilly. This whole pharma business is a little difficult to understand. Freeport McMoran, I hold this copper plate. T-Mobile, I have no idea what this KBR is, WSC is. These are the top 10. B question, where did you get this data? Now I can say just Google it, saying Stanley Druckenmiller top holdings. Some website will have it. That's where I got it. Yeah, this is the website. So they got got all top 50. So if you're interested, I will paste this. So, but I Googled it and they showed me the top holding. So I thought, okay, I know we talked about Coupang, I think in 2020, 2021, haven't done a revision of it. So maybe let's spend some time to see what this company is doing, what makes Stanley Druckenmiller so bullish on Coupang. Again, I don't know why he might have invested in it, but I want to have my own reasons, means we got to do our own due diligence. So let's, shall we dive into Coupang? Before that, is there anything else? Because I'm expecting a plumber, I thought I'll cover this first before we look into what else is happening in the market, right? Some other charts, etc. So that hopefully that won't break the flow. But if you want me to get into, look at some of those memes, what happened, Manchester United, we want to talk more about Manchester United and in the Bed Bath and Beyond, we can move over there. Or if you want to do a deep dive into Coupang. All right, looks like good with either. So then I will continue with the flow. Okay, we got one vote saying Coupang, 100%. If you don't vote, doesn't get counted. All right, so let's start with Coupang. So let's first of all bring up their website. Coupang is there's a question. What was his cost basis on Coupang? I don't know. I mean, I don't think that website showed. Let's see if it shows on the website or not. Maybe does it show all the buys and sells? Oh no, this shows who else is holding this. It doesn't tell me what's up. Not on this. So yeah, I don't know what his cost basis is. Okay. All right, so Coupang is a e-commerce player in South Korea, right? And it's if you do not need to take an analogy of it, you can call it. I think I do have that covered. So let's wait for that. It was founded in 2010 by Harvard Business School dropout Bom Kim. He is the founder and still the CEO of the company. So he's been with company for 12 years. Founder CEO company. I like those companies which are led by founders because they still retain the passion with which the company was founded. I have no grudge against the professional managers, but we do need to bring professional managers when the company grows to a certain size, wherein the founders don't have that ability or the vision, but like Steve Jobs had that, right? So as long as if it is still run by founder, CEO, I think that's a plus sign for me. What's the mission statement? It has nothing to do with e-commerce. But to create a world where customers wonder, how did I ever live without Coupang? So, and you'll understand if you haven't heard about Coupang before or haven't studied Coupang, you'll realize why this is their mission statement. Because the things that they are doing in South Korea, Amazon can do it in US. And for all the right reason. I mean, South Korea is geographically, it's a smaller country. It's very dense, so they can do some of the stuff that Amazon cannot do it. And if they can hook some of the customers with them and make them so addictive, then you would wonder, how did I even live in this world before Coupang was there? Because now I'm so dependent on Coupang. So what is Coupang, right? So they are e-commerce company. Also, they deliver food. So it's like your Amazon plus Instacart, because they also deliver groceries, plus DoorDash, they also deliver food. They have warehouses in over 100 locations spread over 30 cities in South Korea. 70% of Koreans live within the 7 miles of its distribution center. Right? Now, this is data as of 2021. Some things could have changed. Maybe look into a new annual report to see it. They don't use card boxes. They eliminated the need for card boxes and bubble wrap for 75% of deliveries. Right? Be environment friendly. So I do see a comment from Sam saying Bell Mahar was talking about environmental waste of Amazon deliveries, which is true. Sometimes I'm like, bang my head on the wall. If you order such a small thing, which comes with so much of those bubble poly bags filled with air, and that's packed in another cardboard boxes, which all goes to recycle. But yeah, it's a strain on the system, strain on environment. So what Coupang started to do is to use bags, reusable bags, etc., and eliminate cardboard boxes and bubble wraps for 75% of their deliveries. Yeah, they were using reusable containers, like plastic containers or bags. Best thing is oh, I didn't mention one other thing. I think it's that rocket delivery is a little later. If you want to return something, for returning to Amazon, if I want to return anything to Amazon, I had to go to a USPS, or I go to Kohl's, or some other go to Whole Foods, take my stuff over there and they'll scan it and all that stuff. Here, what Coupang is offering to its customers is, if you want to return something, leave it outside your door. Plain and simple. You don't have to pack it again. Just leave it outside your door. Tell on your app that, hey, you want to return this, we'll come and pick you up. We'll come and pick it up. That's a huge convenience, right? Of offering that to customers and having the ability to offer that to customers. Of the easiest return is just leave it outside the door. As of now, it accounts for 4% of South Korean consumer commerce, right? Overall commerce. So, like we talked about it, their mission statement is how to make customer feel. How do I live ever without Coupang? The other thing which Coupang is famous for, which is again, we don't have it in US yet, is your overnight delivery, right? So this is to cater to your last minute needs. Working parents come home and then a kid says, I need to have this composition notebook for my school tomorrow morning at 8 a.m. What Coupang offers is, if you have placed an order before midnight, it will be at your doorsteps by 7 a.m. next, in the morning. Right? So again, sheer convenience for consumers. If you need some last minute rush for your next day, just place an order before midnight, and within few hours it will be at your doorstep. Okay. That is called a rocket delivery. The whole decision why they're able to do this and offer these two facilities, which I don't think I've seen in any other e-commerce company, right? I'm invested in Mercado Libre, which is one of the biggest player on the South America. They don't offer this. I've invested in Jumia, which is on the Africa side. They don't offer this. My investment is in Amazon. We all know they don't offer this. But what Coupang has been focused on is trying to build an end-to-end logistics network to make sure that they are able to offer these services to the consumers, right? We can do now what we believe no one else in our market can do, which is guarantee one-day delivery on all rocket orders. We talked about 1 million of product delivered by dawn. If student needs school supplies, it'll be available by dawn. Effortless returns, just leave it outside your door, we'll pick it up. Deliveries without packaging, again, we talked about that as well. And they introduced eco bags for fresh, basically for your groceries. So overall business environment, Korea is the fourth largest economy in Asia. South Korea is way more tech savvy than United States is. I think, especially when it comes to mobile, the mobile penetration and the adoption of new mobile technology is South Korea is, I think, leads the world, and Europe, I think, is number 2. So little digression, but I forgot to share that in last week. On my recent break and family trip to Europe, what I realized was that the adoption of mobile payment in London, Paris, is way better than what we have in US, right? You didn't have, even I didn't have to buy any, let's say, tickets while using London trains in London or buses in London. They all are connected. Your regular credit card will just work, right? Nowhere I had a need for physical sterling pounds. Even though we made a huge mistake of actually converting some of the dollars into pound, because thinking, hey, if I need to spend something, maybe I need this. But everywhere, it's all electronic. Everyone accepts. They'll accept Apple Pay. Even the train tickets, in some cases, I don't even have to buy the tickets. When you're entering a station, just use your Apple Pay, just scan it, scan your card kind of through Apple Pay. And when you get to your destination, when you're going out, just do the same stuff and they'll just, deduct the money directly from your card. You don't even have to buy the ticket. I'm like, that's great. I know in US we have a Clipper card, at least on California, I know we have a Clipper card. They do also have in London, they have something called Oyster card, but then you have to buy the card and load it. If you don't have a card, just your phone would be fine. The Apple Pay would be fine. So then I realized, okay, how far behind is US in terms of adoption of mobile and mobile payments. Korea is even further ahead than Europe. Very high internet. Sorry for the digression, but I thought I'll share my experience. I was pleasantly surprised. So what I did after coming back, now whenever I go, I see which merchants, if they have an Apple Pay, maybe I want to not just pay through Apple Pay. I don't have to take my credit card out, nothing else, not become so used to with just Apple Pay that why do I need to take my card out? But not everyone still accepts Apple Pay in US. That's a different thing. So there are still, go for groceries someplace, I still have to pull my credit card out. I can't survive just with my phone. Some comments I see. I learned distribution centers are Walmart practice. China, because of cheap labor costs, have multiple distribution centers size of home car garages. Yeah, moped delivery boys. I've seen moped delivery boys. I think even on South Korea, they might have moped delivery boys, because wherever we have that congested layout of cities where they're congested, you can't only depend on big vans, right? Countries like India, kind of like South Korea, where the population density is higher and the roads are not as wide as what we have in US. We will see this alternative form of transportation, which is moped on bikes, etc. Farmers have like TikTok demonstration adverse link to sale page. Okay, so coming back to Coupang, right? South Korean market is expected to grow. E-commerce segment, it is expected to grow to $290 billion, which is huge. We will look into Coupang's latest earning results. Latest earnings. I think their sales, I don't recall, but we'll look at it. I think they are around $4 billion, $5 billion. So they have a still huge runway just in Korea itself, right? Their products, next day or faster delivery nearly in 100% of orders. right? Not in a limited number of hours, but almost all you can get next day or even sooner. Late order by midnight that we already talked about. Rocket Wow membership program for a flat monthly fee. This is what Amazon playbook, right? Get your Prime membership and then you're hooked, and then they keep on adding more and more features for Prime members. Dawn and same day delivery. We talked about Rocket Fresh has become nationwide on leading grocer. Coupang Eats is a food delivery, right? And lastly, the hassle-free returns. Right? Okay, there are some products for merchants. So these are from a consumer perspective. If I'm a consumer, what can I use Coupang for all this? But if I'm a merchant, they provide a lot of tools for merchants to figure out how, I mean, this is what even Amazon or Shopify does the same thing, is for merchants to figure out which products are selling, which consumers are buying. They have models to tell them which, what segment has got what exposure, how you can increase the sales. What merchants can also do is use their fulfillment and logistics Coupang program, which is similar as fulfilled by Amazon, right? Then, of course, they have advertising solutions. They provide merchants to create their own store. This is like Shopify's offer. And then the fee is based on the category of products. So lastly is around the stakeholder management, right? In a part of a world where 9 by 9 by 9, 9 by 9 by 6 is a norm, Coupang's policy is not to work for more than 52 hours per week. Sitting in US and in Europe, you can't imagine, in terms of the long working hours that employees put in countries like Japan, China, India. US, I would say, come next. And I had a shock of in Europe, nobody works. But they do want to, Coupang do want to maintain healthy. From our perspective, this is not healthy, but it is definitely healthy from the regional perspective. Healthy work-life balance. They also classify all delivery personnel as employees and give them stock options, right? Not contractors, unlike what we have in US. So trying to manage and make sure all the stakeholders are kept happy. So that's an overall view of Coupang. Let's jump into latest earnings and see what they are doing. So let's jump into Coupang earnings. So Coupang Investor Relations. All right, so we do have an earnings release. Go through that. Earnings transcript. We'll go through that. What we also need is to figure out their proxy statement, because I do want to see who hold what. I think these three should give us good enough information to see how this company is doing. And maybe this is this is how actually, when I analyze company, this is all the exercise I do. First is go back and look at either their IPO document or their latest annual statement to figure out what this company is, what is their business, what's the overall TAM, who their competitors are. That we already looked at in terms of overall business, their products, their mission statement. Then I'll try to look at, okay, how this company is financially performing, which it means dig into their financial report. So good thing is Coupang's, this report is not very old, because looks like they announced the results on August 10th. So I didn't review it last week, but hey, here we go. We can review it together, right? Announces Q2 record gross profit of 1.2 billion and profit margin improvement of 250 basis points over Q1. Right now, that's okay. Gross profit of 1.2 billion. The reason why they're talking about profit improvement margin of 250 basis points would be because maybe in the Q1 they really had a bad gross profit margin. And now I recall it was because they had a fire in some of the warehouse, and because of that they couldn't ship the goods that they wanted to ship, and all the goods that they wanted to ship to their customers. So they had to, considering that in a Q1, they do want to highlight in Q2, they do want to highlight as compared to Q1. I do see a question. Coupang drifting lower for last 5 years from $50 different investment objectives. Yeah, I haven't even looked at the share price, right? So, and I'm aware that the share, not last 5 years. I don't think it's not even been public for last 5 years, if I recall. But let me just check, make sure I charts, CPNG. Make sure I'm not saying anything wrong. Year one day. This is 2021 finishing. This is, no, they actually went live only in 2021. Yeah. No, they haven't been around for much longer. So they went live in 2021. Yeah. No, it's always good to double check. All right. Right. So it's a pretty new company in the market. And we all know what happened in 2021 or 2020, whenever it went live. Markets were all-time high. There was a whole mania. So any company had, doesn't matter whether they do any business or not, share prices were high. And when I'm looking at or doing analysis, I don't look at a share price, right? That's a post factor for me. But let's focus on the business. Customers turn to us for amazing experience. So let's look at the, first of all, our highlights. Total net revenue was 5 billion, up 12% year over year. Which is not that huge, 12% year over year, but considering the fact that last year we still have had some COVID restrictions in many parts of the world, but 2020 markets have opened up. Folks are more interested. Folks have been doing in-person shopping. So every e-commerce company have seen, reduction in their growth when it comes to year-on-year growth comparison, right? So we did talk about, let me also pull up something around Amazon. So that will be a little apt comparison. How much Amazon revenue grew in Q2? Let's see if I can. Oh, come on. Oh, it's becoming slow. All right, so we'll come to that. But it's 12% year over year. But more importantly, it's 27% when you do constant currency basis, right? This is something that we are seeing in every company that has not US based, that derives its revenue outside of US. We'll start to talk about FX neutral, constant CC, FX, and you'll see these terms because they do want to report how their business has been performing. So I will not pay too much, put too much emphasis on 12%. I want to put emphasis on 27%. Well, this is what the company controls by running their business, right? What's happening in the foreign exchange market are some of the things which are outside of the company's control. So growing your revenue 27% year over year, not bad at all. So I think from the revenue perspective, it's thumbs up from my side. Right? Gross profit was 1.2 billion, increase of 75% year over year. 41% excluding the impact of FC fire in 2021. Okay. That's the fire that we talked about. Net loss improved 134 million in quarter over quarter to 75 million in Q2. Achieved a major milestone of positive adjusted EBITDA. I don't like adjusted EBITDAs because we don't know what all they're including in it to adjust it, but it is what it is. Most of the high-tech growth companies will report adjusted EBITDAs. You'll see some of one-time expense will be taken out from it, but it is what it is. But they did moved into positive category of for adjusted EBITDA. Net commerce revenue was up 4.9 billion. 4.9 billion, 13% over. The other one would be their merchant solutions. Looking at, I think we already touched upon this. So from a revenue perspective, it's all good. Gross profit is 75%. Let's see what's the gross profit percentage. Okay, so we'll have to now dig into. Other thing, we'll come to gross profit. Active customers grew, because this is an important metric, grew 5% to just, they were in 2021, they were around 17 million. Now they are close to 18 million. So it's like they grew just 5%. Is that good enough growth? I don't know. For me to know that, I need to realize what's the overall South Korean population. Around 51 million. Right? So 17 million customers. 17 million they have a customers. They have covered more than almost 18 million. They have covered more than 1/3 of the overall population of Korea. Now we don't have a difference between, I don't have in terms of how many of those 51 million are in urban areas versus rural areas. But I think going forward, I don't expect this number to be, growing 20% rate, etc. Because, hey, you kind of are reaching at a point wherein trying to grow from this base, getting a huge numbers will be very difficult. But what is good is while they are not growing their active customer count, they are still able to extract more from each individual customer. Right? So which is better. Now, okay, so they still have a net loss, but adjusted EBITDA was there positive. All right, so that's nothing which is I'm concerned about here. I guess I like this revenue growth of 27%. I think it is better than what Amazon has in US. So let's see what else. Let's look at some transcript to find out what else management had to comment. Right? I don't get into the too many details on the transcript, but I do want to see what CEO had to say in its opening remarks, because that's where they also generally CEOs, I don't know whether he did, but generally CEOs will talk about what their future growth opportunities would be, where they would want to invest, what as an investor I should be looking out for, what's the overall strategy, right? So that is why looking into the remarks of CEO is important when you're trying to analyze the company, right? So first we talked about adjusted EBITDA positive of 66 million. That is great. We recorded 1.2 billion in gross profit. Margin is 22.9%. Right? Not that great, but this is not a tech company. And now this becomes a little as a personal investor, as an individual investor, if you've been investing in tech companies, the gross profit margin numbers that I'm used to see is like 70%, 80%, right? And now suddenly you're looking at a different sector company, which is your e-commerce company, you're looking at only 23%, right? But then you need to understand this is an e-commerce and this is not a SaaS company, right? The constant currency, we already talked about it. All right, this is important. In short, the spend of our customer cohorts continue to compound at a fast rate, right? Okay, let me make sure I actually download this because I do want to annotate it so that I don't have to do this job later on. Okay, Coupang. This is earnings transcript Q2 for my own personal record. Let me download. And I do want to download. Okay, let me download this as an. Sorry, otherwise I'll forget it and then I will realize, hey, what happened? 22 earnings release. Okay, and lastly will be the proxy statement. 22 proxy statement. All right, getting back to this. And if we continue to grow at, the spend of customer cohort continues to compound at a faster rate. Right? In just 3 short years, the e-commerce segment is expected $290 billion in sales, right? Which is right now, this quarter, they have done what, $5 billion? Let's say on an annualized rate, that becomes, let's say, $20 billion. Still, they have a lot of room to grow within e-commerce. So it's not that they've completely saturated the market or they're already a major player. No, they still have a lot of room to grow. Right? While we have grown to significant scale, we remain a small portion, right? And our growth is powered by customer focus. That's fine. We have increased our investments in rocket shipping. Rocket shipping is their one-day delivery, same-day delivery. This is what I don't like. Okay, rocket shipping exclusive discounts. Why would you call your discounts as an investment? Does that mean customers are not buying the products and hence you have to discount it? And hence you have to lower your cost? That's not an investment, right? I don't care however you might try to reframe the words, but if you have to pay discounts to get your products and ship those products to make your consumers, make those products attractive for consumers, then that's not the best thing, right? Because you'll never be able to compete only based on price. But on the other hand, we saw that the gross margin, the gross profit have increased. So for now, I will not ding it on this exclusive discounts. And free video content for our WOW numbers. So they say they increase their investments to give more discounts and give a free video content. Now, on one side, we can argue that, hey, you have to offer so many free things to entice your customer, but that's what Amazon did with Amazon Prime. You got a free video content. So I think from that perspective, is the same playbook. Get your customer, increase your customer base, build your fulfillment network so that then the customers can't live without, I want my same day delivery. I want my early morning delivery. Right? A recent study by KPMG found Coupang have 20 to 60% average price advantage compared to major competitors for top selling items. I think that's huge. I don't think I've not seen any e-commerce company, making this claim. So that does go positive for Coupang. Now more details on operating results. Okay, to provide more visibility, now we are breaking out product commerce as a segment, representing our e-commerce and fresh offering separate from developing offering segment, which is on Coupang Eats and Coupang International. So trying to separate out to give more insights for investors into this is my core business, these are my moonshots, future growing businesses, right? In product commerce generated 98 million adjusted EBITDA. I'll skip EBITDA. Okay, revenue grew 27%, which was we already know. What else is talking about? Okay, increasing customer adoption and engagement across more offerings, it's accelerating our flywheel. Nowhere this is more evident than in a fresh offering, but this is again part of their core. Let me see what is. We talked about FLC, which allow third-party merchants to shipped by Amazon, similarly shipped by CPG or Coupang, or shipped by FLC. What have they seen? They've added convenience of rocket delivery from millions of additional SKUs and allows us to share the value in the rocket offering with potentially hundreds and thousands of merchants. But how many merchants are there? Okay, there we go. End of Q2, 90% of third-party merchants benefiting from services provided by FLC were small and medium enterprise with less than 2.5 million sales. Okay. We invested in process infrastructure to, box packaging. I don't think I have too much information on the FLC side. Okay, now they're talking about their ESG, which is eco-friendly bags and, not using card boxes or changing their infrastructure and process to use fewer card boxes will save equivalent of 8 million trees and offset majority of our carbon footprint in our delivery fleet. So they're trying to become carbon neutral. And again, one of the reasons, not that suddenly, CEO wakes up and say, I want to save the world. I don't want to contribute to global warming. It is because there are many funds who are now mandated by, changing their charter and saying, we'll invest in you only if you are carbon neutral, only if you have a high reading on ESG, like it or not. But there are funds who started to do that. So now the companies are focusing towards it, and that's why they are doing this, right? Developing offerings, their new businesses increased 24% year over year, but declined 7% because of the decline happened because of Uber Eats. Yeah. Post-COVID slowdown in online food delivery segment. Same thing what we are seeing in US. Any other new business or anything else that's interesting in these comments? We continue to invest and execute in keeping with the operating tenants that we share. One, we exist to deliver new moments of wow to customers. Two, we don't start with what looks easy. We work backwards from imagining jaw-dropping customer experiences and embrace the hard work required to challenge trade-offs that customer take for granted. Providing an ability to return by just keeping outside your doorstep, and we provide an ability to order before midnight and get it before 7 a.m. are jaw-dropping experience, but very, very difficult to implement. So I think at least I do that they are coming, true on that part, right? Third, we employ technology, process innovation, economies of scale. That's okay. Four, we always prioritize growth and long-term cash flows. We always prioritize growth that we could stay non-profit or continue to generate losses for many more years. Disciplined capital allocator, we start with small investment, test it, iterate it. All right. So, okay, now the CFO, I'll skip that. Last is the proxy statement. I do want to look at what's the skin in the game from a management perspective, right? So somewhere they should have, because this is a non-US based company, they should have somewhere your shareholder, where is that? Who holds what? Householding. Oh, come on. Just some kind of statement of ownership, which you would see. Okay, there we go. All right. So CEO, founder CEO holds 177 million shares of Class B. And who else? So I think these are then 102 million, which is another 6.5% of Class A, is owned by Neil Mehta. Maybe Neil Mehta may be an investor or maybe representing one of big investor. He's a managing member of Green Oaks. Okay, so Green Oaks has got a big stake, 6.5% stake, and that's what this is. But this still, this seems to be still a big stake. Let's see how much is a CPMG. It's a $30 billion market cap company, and 177 million multiplied by what? $18, 3 billion. So overall stake is 3 billion out of 30 billion, 10% stake. Not, I mean, from a voting perspective, he has these 76% of voting power is with him, so he can do whatever he wants to do. But 10% stake it's okay, not too bad. That's all I would say, which is good. So from insiders, I think he has got a skin in the game. Let me read some comments here. Sam says, I might 80% owned by institutions, less than 1% insider. That doesn't seem to be the case. It might be talking about only Class A shares, but he does own almost 10% if you include his Class B shares. South Korea has, okay, I do see some background noise. Maybe it's someone eating some wafers. Let me just mute all. So if you want to unmute, you can go ahead and unmute yourself. All right, Bill Gates Trust number 14 holding. Okay, that's okay. He bought Coupang in Q1 2021, 62% loss. Kia and Coupang 2025 to deliver electric delivery van. All right, so thanks for sharing that. Yeah, I didn't know about a Bill Gates Trust. I mean, my interest, especially looking at a Stanley Druckenmiller, why he had made it as 20%, almost 20% of his portfolio, just I mean, higher than Microsoft. Now, so I'll now look at some of the other things which I want to look at is their balance sheet. Oh, this is the earning transcript, won't have balance sheet. Right? So we looked at P&L. Let's look at some balance sheet and see their assets, liabilities. Again, guys, this is what I do. So if you're wondering how, I come up with my thesis and analysis, and what you see is a documentation which I generally bring and say, hey, this is what I'm thinking about, but this is where I spend the time in going through and looking into some of these statements. And you don't have to be CFA, you don't have to be professional analyst to do it. I mean, I am no professional analyst. I haven't spent even a single day in any financial services company or in this role. But yeah, over time, this is easy skill to develop. So why not do our own due diligence? All right, looking at a balance sheet, their cash and cash equivalents, they got a $3 billion, which is good. Inventories is contributing $1.4 billion of inventories. Everything else is small. Nothing much over here. Goodwill is $9 billion. Oh, sorry, not 9 billion. Goodwill is just $9 million, which I like. Means if they made some acquisition, they didn't pay through their nose to acquire those companies, right? Because beyond whatever is beyond the book value of your acquisition, then those will start to show up in your goodwill. So I like that the goodwill is small, right? Liabilities perspective, do they have long-term liabilities? Account payable $3 billion. Cash and cash equivalents is $3 billion. $3 billion is account payable. That means this company, so when we talk about current liabilities, account payable means if we have bought a raw material, or if I bought not raw material because it's not a manufacturing company, this is the e-commerce company. It means you bought your goods from your suppliers, but you haven't paid them yet. It means you got those goods on credit. So those credit will start to show up as a liability because that's what you need to pay and goes under your account payables, right? How about account receivables? Net receivables is only $187 million. So this is something which I like, is the payment terms that they have with their suppliers are very favorable to Coupang. I don't know how they are able to do this, but I don't care, as long as it, the end result is that it's a favorable for them. It means their business is actually sponsored by their supplier. They still in this quarter, their account payable is $3 billion. Means they got all the goods from the suppliers, started selling it on their website, or started selling it to customers while they have not yet paid to their suppliers. So it means supplier bear the cost of holding the goods, they sell it, and then they give the money back to suppliers. So that's pretty favorable in terms of from their business perspective. Right? I don't know how they have been able to get these terms. Do they have more pricing power with respect to suppliers? I don't know how much Amazon does it. So maybe let's see what Amazon has. I mean, how much of their, let's see, Amazon, we did Q2 2022. Okay, let's bring up these Amazon Q2 slides. Where's their balance sheet? Okay. Let's look at. So, I mean, I hope you get the point. I mean, this company, for whatever reason, is able to have those quarterly report. And the suppliers are able to extend them those credits. Balance sheet. Where did it go? Yeah, this is $78 billion. So this is what, they're able to command the same kind of premium, what, let's say, Amazon, or they are able to exercise the same level of influence what Amazon has been able to exercise. So, which I like. It means they do have some power as against their competitors to command these generous terms from their suppliers. Short-term borrowings, long-term debt, 595 million, not too big. I think that's all. Nothing. This does stands out from a positive perspective, but no negative that I see here. Let's look at some of the things that these companies hide. Is their stock-based compensation to increase your cash holding. You may not be giving the salary in cash and just diluting shareholders by giving a lot more money through stock-based compensation. So I do want to look at that as well. Not that it's always wrong, but you need to understand, okay, what's the level of stock-based compensation? So go to your cash statement of cash flows. You should see somewhere stock-based compensation, SPC. There we go. Equity-based compensation, $128 million. That's okay. I don't think that's too big. In fact, they have reduced their stock-based compensation as compared to last year. Okay. So that's not too big a dilution for me as a shareholder. Right? That's one other thing I want to keep an eye on, stock-based compensation. Other thing is free cash flow, right? So we got, where's my cash from operations? Net cash use. So yeah, so they're not right now, they're not generating any cash from operations because they're investing everything. So they don't have any free cash flows anymore. So right now they are adjusted EBITDA positive. Not that I like it, but they're in a stage, remember the company's stage, life cycle stage, they're right in a way early growth stage. So first they need to get EBITDA positive, then they need to get a cash flow positive to become like Google's and the Microsofts of the world. So I think that's all, right? That's all time that I spend in looking at these and then preparing my notes. So overall, I think I am I have Coupang in my portfolio, very small portion, but by looking at now their Q2 results, I think I am interested in increasing my exposure to Coupang. Now let's look at a share price, right? So share price, of course, has been in declining mode, but that's been the case for majority of the growth companies in 2021. Since 2021, let me put it that way. So this company came public in March 21, which was height of mania in the market. And yeah, I won't think too much on it. I mean, it is what it is. I don't control the share price, right? So yeah, time for me to sell maybe some covered strangles, because I do hold it. So maybe sell a put and a covered call together. If it stays in between, reduces the cost basis. If it goes down, I'll be able to buy it at a little cheaper rate. If it goes up, it's covered by the stock. Right? So that's going to be my play on Coupang in near future. If business changes, maybe I'll change my thesis on it. That's all, guys, on Coupang. Any other questions on Coupang, or any suggestions on how I can improve in terms of analyzing the company? Well, because this is what I do. That's the process I go through. Cool. All right, no questions? Okay, so let's jump into something else, which okay, let me just see if I got any message from a plumber. Nope, and no doorbell. So I think let's continue. All right, something that I read about and maybe want to share. Or, you know what? Maybe we'll do this later. Let's look at some of the other news, other things that caught my eye in terms of a news, etc. Germany, what's happening in Germany scare me. PPI. Oof. PPI is a producer price index. I mean, this is the kind of an inflation faced by manufacturers, the producers of the goods, right? Now, only two things can happen after this. Number one, it could be a leading indicator of CPI, because if as a manufacturer, if I'm paying more price to produce the goods, I will increase the price of of the goods that I'm producing, and the consumers will have to pay higher price. So it means the CPI, which is consumer price index, will go higher. Right? Number two is if I don't have a pricing power as a company, if you don't have that pricing power, if you're not Chipotle, you can't increase the price of burrito by 20%, 25%, then you basically take a hit on your earnings, right? So either way, not good. So this scared me. It's up, from almost 0 to 37. So 37.2% is a producer's price index inflation number. Now, what constitutes a 37.2%? The biggest is energy. Right? Energy is one of the big costs that goes into manufacturing anything. And that energy has gone up 105%. Now let's talk about, the decision to shut down the nuclear power. It's costing Germany huge. And I think this is probably a similar story across Europe. And I think is what yesterday or day before, looks like Russia wants to again shut down the supply from Nord Stream pipeline number 1 to Europe. Unfortunately, the decisions around, I am proponent of ESG. Through my own eyes, like a little digression, but I think it's important because we talked about ESG. While flying back, I had an opportunity to be near a window seat. So while the plane was above Greenland and was looking down, I could see many of the mountain peaks did not have ice. We hear about ESG melting, icebergs, global warming, but I never seen. It's the first time I actually saw through my own eyes when looking. I'm like, then I went on to the entertainment center to see which portion of the world are we on, and we were flying over Greenland. I'm like, gosh, why there is so little amount of snow left on those peaks, right? So that was my first, I'm like, this is not good. But in any case, so we have to move towards renewable energy, no doubt about it. But the decision taken in haste to close down all nuclear power is costing Europe really, really, hitting it really, really bad. And now they're trying to restart their coal-fired plants. We've gone all the way around 3360 degree, flipped from being ESG friendly to now running coal-fired plants. But this is what it is. Now this is another chart which tells us the price of electricity, right, in Germany. So this is where it was. We are in August, right? So December, March, June. Okay, so this is last December. So this would have been last August, right? Somewhere here. Now this is new August. So it's a crazy situation. And Germany is probably one of the few countries which is feeding the rest of the Europe. We got to keep an eye on what's happening. What does that mean for the rest of the EU? So interesting, eye-opening chart. Second is around, we talked about Best Bed Bath and Beyond, not Best Buy. I always get confused between these two tickers, BBY and BBPY. Best Bath and Beyond. So this is that I shared last week in terms of this huge run-up in Best Buy, in Bed Bath and Beyond. Attributed it to meme mania, coming back. But then Ryan Cohen filed a notice to sell his full stake, is almost approximately 8 million shares, close to 12% holdings, right? Now, I had some respect for Ryan Cohen when he, based on what he had done in Chewy. So he's a great founder operator, but I don't think I have the same respect of him as an activist investor. Based on what he did in GME, I mean, then he's playing the role of like any other fund manager, pump and dump, do whatever you want to do, get your profits and move out. It's not really doing the job of activist investor. Is wherein I want to fix this company. GameStop, he acquired a lot of stake in GameStop, got board seats, appointed his own people on the board. But from operations perspective, nothing much happened, right? Nothing. Yeah, he wanted to GameStop to move towards more towards e-commerce and then become NFTs and all that. Then he acquired activist stake in Bed Bath & Beyond, and he got a stake somewhere in January, I think earlier this year, if I'm not wrong. And now he sold all his stake, right? Whereas the business on Bed Bath & Beyond is becoming worse and worse. That is very important to see on a business and not on the stock price. Stock price did wonderfully good in last 1 month. So he filed a notice saying I'm gonna sell all his shares, and this is what happened to the stock price. Came back to earth. I don't know what is Bed Bath & Beyond right now. BBBY. Okay, $11. Okay, so is a meme mania back? I don't know, but be careful now if you want to follow Ryan Cohen. You don't know when he'll get out. Now there are a few things around it. Not only he had a stock, he bought a stock, but he also started accumulating far dated, I think 2024. Oh, sorry, maybe 2023. Hold on, let me, why guess? Let's say Ryan, I actually saw it, Cohen's BBBY purchases. One of the filing you have that one. But what I also saw that okay, leave it. Don't want to take more time. Not only he had bought shares, but it had also bought 2023 expiring options, a few million options, right? Call options. Now, some people are thinking maybe he actually was kind of doing what Wall Street Bet he used to do, is to try to do a gamma squeeze by buying by buying out of money call options, and then having market maker to cover their delta or to hedge their position. Market makers will buy the stock, and that stock will continue. That's how the stock goes up. Trying to do that kind of a gamma squeeze, what we witnessed in GameStop in 2021, early 2021. Right? So there are some accusations saying, that's not how activist investors play. That's not activist investor play. The other accusation could be is, hey, why did he sell at this top? Did he have some insider information, right? You just acquired the stake this year, haven't made any bigger changes of business. Now you're saying, okay, I'm dumping everything. Now he does not have a board seat. He declined to get a board seat. So obviously there is no written, there is no track of, hey, if he got, insider information, he wouldn't have received a board minutes of meeting, right? But who knows? He's got a big stake, probably no right people at the right positions, but that's something which I think now some are calling for an SEC investigation into this whole transaction. Right? What interesting meme that I saw around this. Those who've been buying BBBY as a part of a meme mania, thinking that you are part of a real movement. You're not just exit liquidity for Ryan Cohen, but I think that's exactly those unfortunate speculators have turned out to be. Right. So that's one meme. Other one is Elon Musk, right? So Musk does what he does. I don't know why he does what he does, but now he's got more than 100 million followers on Twitter, right? So you got to keep those followers engaged. You got to keep feeding them. Now you become a slave of your followers. Right? That's an interesting phenomena of how the relationship between the one who is being followed and the followers have actually changed. When you don't have a big following, it's kind of other people want to follow you. You are actually leading the crowd, right? They want to listen to what you have to say. And that's how you build your crowd. But once the crowd becomes too big, then you become beholden to the crowd, because now if you want to maintain that level of followers, you have to keep pleasing them with whatever. So you become a slave of your followers. Sometimes I have a feeling that Elon has fallen into that trap. He has to feed something to 100+ million of his Twitter followers. Good, bad, right, wrong, ethical, not unethical, legal, illegal, it really doesn't matter, as long as he can keep feeding something to the crowd. So I don't know how many of you heard about this Manchester United, this stuff around Manchester United, but that's happened last week. So he posted a tweet saying, "Hey, I'm buying Manchester United, which is an old prestigious football, not football, we call here we call as a soccer. Rest of the world calls it football, but we are in our own world. So the one of our prestigious soccer teams in Europe, in UK, Manchester United, haven't been performing well, really disappointing their fans. So the fans are calling for a change in the ownership. There's a family that owns this club. So Elon says, also, I'm buying Manchester United. What he did not know, or probably who cares whether he knew or not, because it won't stop him from posting this tweet, that this is a publicly traded stock. So, okay. So, and there was another tweet on, are you serious? No, this is a long-time running joke on Twitter. I'm not buying any sports team, right? What happened between these two things, right? The moment he says, I'm buying Manchester United, lot of option activity. Right? Man U generally gets zero option activity. 2 days ago, means around August 16, someone did 450K of options, sustained volume in $14 calls, expiring 31 days. So basically that expires on September 16. Now we don't know what's the relationship between who bought these calls and why did Musk tweet about buying Manchester United. And there was another screenshot by someone who's been like sharing his spoils on a Twitter saying bought. Probably spent almost $30,000 in buying these call options, $14 call options. Right. But yeah, I don't know. I think now Elon Musk, or sometimes I feel now Elon got a competitor in Ryan Cohen. Right. Not too. I thought he himself is more than enough. Now you got someone else as well. But he does what he does. Now we don't know what's a legal action that SEC might take around. You can't just make an statement around publicly traded company when you're in a position where Elon is saying, okay, I'm going to buy this company. But I mean, we have seen in past that hasn't deterred Elon from doing what he does. Another news that caught around Tesla, not good news, is around, I think there's some investigation into their autopilot by federal, whatever that our authority, not National Highway Transport Authority, around their autopilot systems. So Tesla will continue to be volatile stock. It's a great stock for options because it's volatile. But it is what it is. Let me sip some water. All right, maybe the last topic before we close down the shop for today is hedge fund actions. Monday was the last day for hedge funds who have minimum $100 million under management to report their filings, 13F filings. So some of the notables, I just want to quickly go through it. Warren Buffett, what did he buy? He bought Ally Occidental Petroleum, right? He's been increasing his stake in Occidental right from day one. Now he increased the stake up to 20.2%. I mean, based on the filings, that what we saw. Also increased a little bit on Activision Blizzard, which surprises me because if you recall, Warren himself said that this is the arbitrage play. Where is Activision right now? I haven't talked about Activision on arbitrage for some time. So let's do last 1 year. Oops, 1 year. Yeah, so it is $80. At lowest, it went to $74. I think Warren bought it somewhere around 76, etc. At that time, he talked about it in his shareholder meeting, saying for him it's an arbitrage play. Microsoft had agreed to buy Activision at, if I recall, $96, somewhere around that, and that's why the stock had jumped all the way to 87. But then market wasn't really sure that the deal will close, so stock has been sideways, after the initial jump. And Warren Buffett took a stake, saying it's because he might have a conviction that the deal will get through. And if you're buying something at 70, let's say 75, 76, which Microsoft will buy from you at 96, that's a decent, 15, 20, 25% arbitrage opportunity. So I thought that's all. He was done with it, but looks like he increased his stake a little bit more. Then he also bought Markel. Good. I don't think we have talked about Markel in this sessions, but I do hold a position in Markel. I did trim in my retirement portfolio. For me, maybe let me take a note. Maybe sometimes we should talk about Markel. Quick is Markel is a mini Berkshire. They do they're basically following Berkshire's footsteps. It's an insurance company, use that flow to invest into and buy equity stake in other companies. That's what Markel also does. And then McKesson, which is a distributor of pharma goods. What he sold Verizon and Royalty Pharma. Where he pared down his stake means not completely sold, but pared down the stake is in US Bank Corp, General Motors, sold some General Motors, sold some Kroger, and Store Capital. Okay. One of the, in terms of when you talk about REITs, etc., or investing in properties, Store Capital name used to come very often, and with the tagline say, hey, Warren Buffett has invested in Store Capital. I guess can't use that anymore. Lastly, on Friday, he also got permission to buy to 50% of Occidental Petroleum, and I have no doubt that he won't buy it. I mean, that's what. First, we thought maybe it's a position he wants to just start a position Occidental, but knowing what Warren does, he wants to buy big ownership stakes in companies. So looks like now he's got a permission. So that's what Warren did, or Berkshire Hathaway did. Soros Fund Management. Again, George Soros, new investment in Tesla. So I guess that's a very small investment, and slash the stakes in MGM and Solid Power. David Tepper Appaloosa took a new position in CRM. Alibaba and Netflix. What I'm interested in Elliott Investment Management, because he's generally very active. Elliott is very active, especially on the tech companies. Last week or prior to that, whenever we had reviewed those PayPal and Pinterest results, we did talk about the fact that Elliott had they took a stake in Pinterest. Also, they've revealed a 10 or sorry, not 10, maybe $1 billion stake in PayPal. So basically, they have stakes in PayPal as well as Pinterest. Looks like they shed Twitter. Bridgewater, the biggest hedge fund, started position in Revie and Amazon. Lastly is Third Point Capital. Dan Loeb bought 1 million shares in Disney, and this is what the activist now investors, as an activist investor and hedge fund manager, now he wants to change board composition. He wants to spin off ESPN into separate company and whatnot. So those are some of the big hedge fund actions. Every quarter, these hedge funds have to report their significant buys and sells as a part of their 13F filing. And this is a quick summary of some of those. Okay. Lastly, important chart, but this is amazing, right? Saudi Aramco, the second biggest market company in the world after Apple, reported $48 billion of profits in Q2. Right? Yeah, I know Chevron also reported good profits. I think Exxon reported record profits, but Saudi Aramco reported $48 billion in this quarter, which is, you can add Microsoft, Apple, Meta, Tesla all together. Still, this behemoth is making money hand over fist, and all because of what's happening between Russia and Ukraine, right? Oh, oil prices have been through roof. All right, I guess I would like to stop here because this is a longer article around A16Zs and what they've been doing. So we'll probably do it for next week. Only key takeaway, I thought VCs in the Valley have learned their lessons and have understood that we got to focus on, and maybe most of them are, but when you have lots of money available, people start to lose their head. So A16Z made a recent investment of $350 million in a company called Flow at a valuation of $1 billion. That company, did you hear about that? The most interesting is the founder of that company, and that's why it caught my eye. I'm like, guys, you haven't A16Z, Mark, you haven't learned your lesson. But I guess when you have billions of dollars, throwing a few $100 million doesn't matter. The founder of that company is, drum roll please, Adam Neumann, the founder of WeWork, or I should say the disgraced founder of We Didn't Work. He's back in the market. I mean, he was back in the market a few months ago when he raised $70 million for a company called Flow Carbon. And I'm like, what the heck is it doing? That company was to put a carbon credits on blockchain and basically trying to ride the crypto wave. And this week, he revealed another raise of $350 million thanks to A16Z for a company called Flow. Let's see, how long do these flows, but at a valuation of $1 billion, right? We'll probably dig a little deeper into that. And I want to do a comparison of, is A16Z, is it US's SoftBank? This investment made me think so, right? So let's save it for next week. I see a question. Do you say this presentation document to read? This is available on my website, but because I do have to do some work to behind this and upload and manage everything. So it is available. As you can say, I don't use Patreon, but I have my own website where I'll post the document and the recording of this session at I think $20 per month or something. But that's behind of paywall. More from a perspective, I didn't have it behind paywall, but then people say I don't need to attend it. We can just view the recording. So yeah, that's okay. That's the last one anyway. So we'll cover it next week. Looks like A16Z wants to make sure to bet on short-term rental market. I want to talk about, I mean, that's what they're thinking, that the rental market is screwed up. So Adam Newman is going to change the rental market. I don't know if it is a We Live 2.0. I mean, that's what he wanted to do with We Live, is trying to change the residential side. Now he's trying to focus on one portion of a residential side, which is rental markets. We'll see. I am no one to judge. If someone has a capability of raising $350 million, even after what he blew up WeWork. I don't think he blew up WeWork, but I think it was there were material weaknesses. So I do hold him responsible for mismanaging WeWork, but I don't him responsible for blowing up the valuation of WeWork. I mean, that's the VC's problem, and A16Z is exhibiting the same behavior what SoftBank used to. And so we'll dig deeper into a little bit of a SoftBank, what they invested in and what's their current situation, and then talk about A16Z. All right, I guess that's it for today. Unless there is any few questions, I can hang around for another 5 minutes, 5-10 minutes. Otherwise, we're done for today. I'm feeling hungry, want to go out, but I have to wait for the plumber. So let's see.
Well, I have a very basic question.
Sure.
Might try your patience a little, but sort of a little overwhelmed with this sort of in-depth, analysis. But I'm certainly glad to learn about it. But could you kind of summarize, how is it that you tell sort of how good the management is? I mean, because the results can depend a lot on the external environment and things like in their previous history. But when you're trying to say size up, the quality of the management, the executive management.
So
I
look at management, have they delivering on their promises or not. Right? So when you see the business results coming out, there are two ways to compare the business results. Most of the time, market will compare it with what analysts were estimating, right? What the Wall Street was estimating. But I also focus on, rather I put more emphasis on what management told that they want to commit for the next quarter or next year, right? And how have they delivered on their own promises? Right? Beyond that, number two, I do want to make sure that management doesn't have any legal troubles, right? But beyond that, whatever they do in their personal life, I have a zero interest in what management does in a personal life. If they're able to deliver on what they told they will deliver, if they're able to grow the business in the right direction, that's all I need to see in the management. Whether they smoke weed in their free time, go ahead and do it. Just don't do it during the office because it impacts my share price. So the results will speak for management. And the quality of management overall, the strength of the management is how good they are. And now that looks at CEO I consider CEO just as a visionary to set the direction, but then how they are managing, let's say, their cash, that tells about the CFO side, right? How they are growing their revenue, that will tell you who's in charge of the sales, right? How they have been performing, things like that. So for me, it's just the result. And did they deliver on their promises or not? I hope that answers the question. Yeah.
Now you talk about the importance of delivering on their promise. I mean, so say if they promised spectacular results and they didn't quite meet that, but they still did very well compared with, what other companies do, you'd still hold that strongly against them.
I may not hold it very strongly, because hey, if you have still been able to, your competitors didn't do it, means something on a macro environment has changed. That has become very difficult. So you did not do what you said you'll do, but you manage the situation better than your competitors. Right? There are some things which will always be outside of management control, right? But in that case, if you have been able to perform better than your competitors, okay, I'll not ding you for that. I'll still consider that as positive. Now, what I don't like in some of the management, like if let's say if some company comes and talk about a small, let's say a bank in Wyoming, and coming and talking about, oh, we actually sucked this quarter because of the Russia-Ukraine conflict, right? Every other company, many companies use this excuse. But if that management comes and talk about that, I'm going to ding it, right? Reason? Guys, you are a bank in Wyoming. What have you to do with Russia? You're just making that as an excuse. But if there's a company which is really have operation, let's say in China, and China is going through the whole COVID lockdown, and if management had given that we'll grow international revenue by X%, and now China has got a strict COVID policy, they shut everything down. You didn't grow X%, but you came less. I'll say, okay, how, if you're Starbucks, how would your other similar business have done? You've done better than that. Still okay. There are some factors which will always be extraneous to management. They don't have in their control. But how well have they been able to go through that and manage the company as compared to competitor would still be better. Right? If they still did better, then I would consider that as a positive sign. Yeah, so that's my thought process. Okay. But yeah, you have to, that's why it's important to read through the CEO commentary or management commentary. Maybe in some session we can talk about, when I look at Edgar filing, the initial annual report, which are some of the areas where I pay attention to. One of them is management commentary on risk analysis, right? Those are the things that do tell us what management is thinking about those companies. How well are they prepared in terms of analyzing what could impact their companies? So it does. The quality of management is a good factor in my decision making.
Vivek.
Yeah.
I noticed that Coupang has a lot of executives, and I'm sure a lot of employees have a lot of stock options. How would you compare this to SoFi? I mean, they get a lot of employees get a lot of stock option compensation also.
Yeah, so Coupang, when it came out in 2021, when it came out of IPO in 2021, I think that time we did look at it and say, hey, is this stock-based compensation a critical, big risk factor? I think the management does understand it, and that is why we saw that they actually have reduced the stock-based compensation compared to last year, right? So it's not a hugely dilutive, but the dilution is not too bad. I think it's about 2 or 4%, 2% maybe. I have to look at a SoFi number. I have not looked at SoFi, but you really need to look at in terms of what's the percentage dilution that is happening through stock-based compensation. Right? Another company which is very notorious for SBC is Palantir. Right? They just dole out stocks as if it's, it's none of, basically they're just pulling thin air and out of thin air and just giving out stock-based compensation to their employees. But if it's, let's say, 2% dilution, 4% dilution, yeah, that is okay. I won't ding it for them. But if you're diluting 10%, 20% in a year, that's a huge concern for me. So you need to look at overall dilution and then make a decision. So Coupang, I'm not too concerned right now. And it looks like the company also acknowledges it, and they are reducing their SBC.
Another thing, I was looking at how the big tech companies were firing people, and Microsoft is only firing 1%. I don't, it should be 10%, but anyways, they're only firing 1%, which is very commendable.
I mean, Microsoft. So again, a little different. But Microsoft is a company that has got a very strong balance sheet, right? So that's where those free cash flow now comes into picture. Big companies with a strong balance sheet can survive this storm longer than what smaller high growth company with a weak balance sheets can. So, and then they will have to resort to major cost cutting to, otherwise they'll just sink in this environment. So yeah, I'm not surprised that Microsoft has done only 1%, because I mean their balance sheet is super strong.
Back in 2008, Microsoft's beta was only 1%. So during the 2009 recession, it only fell at 20% from where I bought it.
Oh, no, that's great. Yeah. So let me see. Yeah, I mean, Microsoft. So for me, Microsoft right now is one of my, when you're trying to build your portfolio, you always have something which is core part of portfolio, right? Hey, it doesn't rock too much. These are big behemoth, big ships, cruise ships kind of a thing is. Microsoft like one of those in portfolio. And then you have some small high growth tech companies which will go up or down like 20%, 30%, like your ECGs shows up, small dangers which a big wave can just throw it away. Those like Palanters of the world. And then there are some moonshots that we have no idea right now, don't make any money. Those are like I never gambled, but I get the same gambling pleasure, if you would say, by buying those moonshots. So I don't buy Powerball tickets, I'll buy those moonshot companies. Yeah, no, Microsoft good. So let's see SoFi. Where is their cash flow? Oh, this is an eye chart.
Well, I have SoFi. I opened a SoFi account. I don't know, maybe 15 months ago, because I wanted to buy options. But at that time, I couldn't buy any. What's that Kai favorite company? I couldn't buy that. Couldn't buy that. Crypto. Oh well, a couple months later you could, but I stopped. But anyways, I'm not satisfied with SoFi service. I don't like it. It's so impersonal. I don't like it.
Yeah, I mean, again, one of not a scientific, but a very good pointer could be, as a customer, do you like the products or not? And sometimes the investing decisions based entirely on that. So let me see, what does SoFi, come on, open document, see stock-based compensation. So let's go to, we should look at statement of operations. And so net loss is $95 million. Okay, stock-based. Let's change this. Let's see. Cash flow statement. There were cash flow statements, share-based compensation, $157 million. So, okay. And what's the balance sheet? $157 million. Okay, balance sheet is $700 million. So almost 1/5, more than 1/5, more than 20% of the cash that they are holding came from not paying cash to employees, but going through share-based compensation. If they had not done the share-based compensation, yeah, I mean, their cash position would have been worse. Now, what I don't know is, should look at, I don't think I'll have time to look at it, is how many shares were issued and how many shares were outstanding. That will tell us the dilution. All right, we hit 12:30 mark. And looks like I'll have to call plumber if it doesn't show up in next 30 minutes. And I feel tapped out. So we'll stop right here. Thank you everyone for today.
If I could ask you further about comparing management, you say, compare them with their competitors, but many companies, they don't really have an equivalent competitor. I mean, there'll be some competitors will be competing in one aspect of the business, other competitors will be competing with other aspects of their business. So
yeah,
really,
no, I agree. First is probably, if we haven't found a competitor, maybe we haven't looked hard enough. But even if you looked hard enough and saying, hey, there is no real direct competitor for it, yeah, then you go by what management is saying and see, how good or bad they are. Then, I mean, it's not a science. For me, it's an art. In some cases, yeah, I could be wrong in judging the management, but that's all investing is about. You cannot always get everything right, but I do want to make sure that I do spend some time in looking at, gosh, you talked about, a great example is this Jumia, right? If you know, I've been holding Jumia for quite some time. It's one of our big holdings in my portfolio. And I had started to have a concern around their management. And it became very aggressive in selling calls because first they told, they switched from a growth to, hey, we want to be more profitable, right? And then 6 months later, they say, no, we are investing into a lot of marketing, advertising, because we want to go back to growth. I'm like, what the heck you people are doing, right? Tell me, okay, if you got it wrong, that's fine, but how do I know that you won't get it wrong again, right? So be aware, and being aware of what management is saying, and if they are changing their story continuously, it's a red flag, right? So now, did I sell everything off Jumia? No. But did I become more aggressive in selling my covered calls? Sure, yes. Because I think overall, from a growth perspective, I think still there's a lot more to be done in African e-commerce. But that's how I play management's quality in my decision making. Right? Another one which we thought where it was, I think there was one company, and for those I actually sold my shares. I forgot which one was that, in which the management came and told, we're gonna do this, and they got their estimates way far off, and then they withdrew all their guidelines. So I'm like, okay, I don't think, that area wasn't very nascent one. It's already competitive, and on between that, if you goof up so much, I have nothing to do with you. So it's a case-to-case basis. I don't think there is a one answer that will fit everything. But we should consider that when making our decision.
Oh yeah, when I said comparable or direct competitors, I didn't mean that the company didn't have competition, but mainly, but it'd be more that there'd be different types of companies that would be their competitors. So it would seem that you didn't have anything really comparable to compare management with. I mean, like one competitor may be competing in one segment of their business, another competitor may be competing in another segment, and that kind of thing.
Yeah. And in some cases, we could see, which is the biggest revenue generating segment for that company. If one of them is, let's say, 80%, maybe we use that and find a competitor only that. Even if we don't find any competitor, but then still, we go back and say what management said, they haven't delivered, what were the reasons, and then make a judgmental call. And that is why I'm a little afraid of those AI models, because, hey, you can make a mathematical call by just plugging in your two balance sheets or plugging in your two P&L statements from last week to this week, last report or this report, and put management guidance model, and your mathematical model will tell you, you got it 20%, you delivered 18%. Does that mean should I sell the shares? No. That's where we need to bring our own intelligence over there. Cool. All righty. Thank you, everyone. You guys have a wonderful
Thank you.
rest of the weekend, and we'll talk again next week. Goodbye, everyone.